Every quarter, super investors like Warren Buffett, like Bill Ackman, reveal what they have been purchasing in their own portfolio over the last few months. And in today's episode, we're going to take a look at the top 10 stocks that these super investors hold within their own portfolio and mention whether or not we believe they are great buying opportunities now and what price we do see these with certain margins of safety. Now, the first one that every investor or the majority do hold is Alphabet. Now, we can see 33 super investors hold GOOGL. In fact, another 26 hold GOOG. Now, the difference between those are purely down to the voting rights. So if we were to add these two up together, we can in fact see it would be the most held stock by super investors by quite some margin. So what do we think about this company? Well, it is up around 15% over the last 12 months. We also note over the last 10 years, it has outperformed the S&P. It is up 440%. And right now we see it trading around the midpoint of the 52-week range, where we get a double buy rating from Seeking Alpha and Wall Street with a hold from Quant. Now, it did recently offer a dividend 0.5%, and we do see it now with a forward PE 20.9. This is essentially the lowest traded company in the Magnificent Seven on a valuation from this basis. And when we take a look at how they've performed, well, nice to report over the next 4 quarters, they are anticipating 3 of them to be double-digit increases to the earnings per share. And we note historically they have outperformed in terms of analyst targets over the last 4 quarters, giving them a 100% track record. Now, taking a look at the valuation of this company, our value of $188. How we got to this, we did run it through a DCF model. Now, we'll show our process for this company, but moving forwards, we will make it very brief. What we have done is we've put it through the free cash flow analysis. Free cash flow year on year, average growth of 24%, and as we can see, forward looking, we've gone 10%. We want to be conservative. That is lower than the previous year increase, lower than the average growth rate, and with that 10%, including our discount rate, we ultimately get the present value of future free cash flows and terminal value, which we add together with their cash, subtract total debt, get to the equity value, divide by the shares outstanding, and as we can see, 188, which does imply 18% upside. Now, some people may say that is too low. So for the 15% estimate, we can in fact see 265, which for confirmation does come through this calculation, giving 67% upside. And for those who are a lot more bullish about the future prospects, at 20%, 372 does indicate 134%, which is more than double the current trading price. Now, we will take the 10%, which we do believe to be on the more conservative side, but as always, you can grab a copy of this model by clicking on the pinned comment below, running your own numbers of whether it's for Alphabet or any others. First thing we want to point out, Wall Street are very bullish. They do see 28% upside, $204 price target. And when we run through the margin of safety on this channel, we always like to start off with 10%, and we execute on this if we believe it meets our 3 golden criteria: wide moat, strong financial metrics, good forward-looking data. If you believe that, well, a buy up to $169. Then we keep going till it's near the current trading price. And in today's episode, we see a 15% MOS, Wall Street see 28% upside, and remember, this is based on what we would say as a conservative 10% estimate moving forwards. So in our opinion, the number 1 stock held by super investors does look like a fairly strong buy. Before we continue, we also want to let you know we have released our latest free weekly article where you can get access to this and many others by clicking on that pinned comment below and getting access straight away. We have in fact also within this released our 25 undervalued stocks for the month of September for your own consideration, and on top of that, just last week we also released a spreadsheet looking at 22 stocks in the S&P which have the most upside right now according to Wall Street. So do go ahead, check that out by clicking below. The second most held stock by super investors is Microsoft Corporation. Now this is up 31%. Remember, they just announced yesterday a 10% dividend increase with a massive share buyback authorization program. Over the last 10 years, another one that has significantly outperformed the S&P. It is now trading at the upper end of the 52-week range, although we do know both Wall Street and Seeking Alpha consider this a buy, with Quant giving this a hold. In terms of a yield, again, fairly trivial, 0.69%, and in terms of the valuation, currently at a 33 on the forward PE. We also note, very similar to Alphabet, moving forwards, 3 of the next 4 double-digit EPS anticipated, and they have historically outperformed in terms of what the analysts have expected for this company. Now, in terms of our valuation, we have an intrinsic value of $462, and whilst it is a very high quality company, when we run it through the calculation in today's episode, we only see a 5% MOS, up to around $439. Now, if you want that 10%, you would have to wait around $416, at 15% around $393, and at the 20% mark around $370. However, no one knows if it will hit any of these marks. Right now, as we said, 5% MOS, with Wall Street indicating 17% upside. They are a lot more bullish with a $505 price target. Now, right now, this isn't one that we do believe is a strong buy. As we said, only 5% MOS, and we would like to see a lot higher in terms of that safety before executing, although this is one that we already do hold in our own portfolio. Third most held stock is Meta Platforms, very similar to Microsoft, a double buy with a hold from Quant, and similarly, Wall Street do give this a strong buy. This one is now trading right there towards its 52-week high, up 77% over the last 12 months, over the last 10 years, again following that theme that it has outperformed the S&P, and similar to Alphabet, recently announced a dividend, 0.37%, so again on the lower end, but as we can see, a lot cheaper in terms of valuation versus Microsoft, but marginally higher than Alphabet, around 25.2. In terms of analysing the forward movements, well, we can in fact see all 4 of the next quarters, they are anticipating double-digit EPS growth, and they have historically, over the last year, outperformed analysts and their target. Now, in terms of our valuation, with an intrinsic value of $567, we have here a MOS of 5%, very similar to Microsoft, although we do note, unlike Microsoft, where Wall Street were a lot more bullish, we see their $550 price target indicating very minimal upside. Similar to Microsoft though, our investment strategy for Meta is the same. We don't believe right now with a 5% MOS, this is one to consider, unless it is maybe a part of a group of companies that you do dollar cost average in over a certain period. We then move on to company number 4, which is Amazon, where we have again very similar, strong buy Wall Street, buy from Seeking Alpha, and a hold from Quant. This one doesn't currently pay a dividend, with a forward P of 39.6, trading at the upper end of the 52-week range. Great performance over the last 12 months, up 33%. Very strong performance over the last 10 years, massively outperforming the S&P, up over 1,000%. We also note over the next 4 quarters, 3 of them double-digit growth expected, and similarly, they have outperformed management expectations by quite some distance. In terms of valuation, well, $226, very similar to Alphabet. We do believe this is a fairly strong buy now. At a 10% MOS, a buy at $204, at 15% around $192, and it isn't currently at the $181 mark, but if it was to get there, we would see a 20% MOS, but right now, 15% MOS with Wall Street, pretty much a fairly similar price as us, $223, upside of 20%, and like we said, similar to Alphabet, our conclusion is the same. This is definitely one we would consider in the portfolio, given the MOS, given the upside, and just the general strength of this company as we have analysed over the last few days. We then move on to Visa, similar to Microsoft. This one does sit within our own portfolio, and it has hit a double buy rating with a hold from Quant. This one also trades at the upper end of the 52-week range, a 0.71% yield, and in fact, as we can see, a forward P of 29.4. Over the last 12 months, up 18%. Over the last 10 years, again, up 446%, significantly outperforming the S&P. And we also note 3 of the next 4 quarters, double-digit expectations to the earnings per share. And out of the last 4 quarters, at a bare minimum, they've either been in line or they have outperformed. Now, our valuation of Visa today, as we can see, $323 on the intrinsic value, marginally higher than Wall Street's $316, where they see upside of 9%. In terms of a margin of safety, well, at 10% pretty much is where we see this company right now. And for those that want to see at 15% a buy at 274, at 20% around 258, and it wasn't really there that long ago. So this is definitely one we would consider to add with at least a minimum 20% MOS. For those that also want to see at the 25% level, 242. But in today's episode, 10% MOS with 9% upside. As always, do give us your thoughts as we go along these stocks today. We then move on to Apple, where we have just a singular buy rating from Wall Street. This one is trading at the upper end of the 52-week range, a yield of 0.46% and a forward P of 32.4. Over the last 12 months, up 24%. Over the last 10 years, again another outperformer of the S&P, up 774. And we note only 2 of the next 4 quarters double-digit growth expected. But again, the trend does continue where they have outperformed in terms of what analysts were expecting. Then we get to the valuation, the first one today, where we do believe the current price is above the intrinsic value. Therefore, we see this company trading at a bit of a premium. However, Wall Street, on the other hand, they have a price target of $250 and they see 14% upside. So running it through the MOS, just for those that are curious, at 10% a buy at 187, at 15% around 177, and at the 20% mark 166. But as we said, we do believe this right now is trading at a little bit of a premium. We then move on to UNH, another one that does sit in our portfolio alongside Visa and Microsoft. We get a strong buy rating from Wall Street, a buy from Seeking Alpha with the hold from Quant. This one does trade at the upper end of the 52-week range, a yield of 1.45%, and as we can see here, a forward P of around 21. Over the last 12 months, up 20%. Over the last 10 years, again, up 572, significantly outperforming the S&P, and they've also outperformed in terms of expectations over the last year, and we do also note 2 of the next 4 anticipated double-digit growth. Now, in terms of UNH and the valuation, well, we pretty much see it right now trading at its intrinsic value by a few dollars difference, and we also see here that Wall Street don't see much more upside with $600 price target and 3% upside. Now, in terms of MOS, well, at 10% a buy around 528, and at 15% a buy at 498. Again, something we have seen not too long ago. At 20% around 469. But though right now, as we mentioned, this company, similar to Apple, is trading near enough around its intrinsic value. So if you are buying, you may be paying a little bit of a premium depending at what price you are getting it. We then move on to Mastercard, where we get a double buy and a hold from Quant. This one is trading pretty much towards its 52-week highs, a yield of 0.53%, a forward P of around 35, and a nice 20% gain over the last 12 months, with over the last 10 years up 564. Again, this one, like all of them so far today, has outperformed the S&P, and again, similar theme, double-digit EPS growth expected over each quarter, with outperformance over the previous 4. Then we look at Mastercard, and we do see in terms of the valuation, there is a little bit of a MOS level, not massive, at the 5% level up to $504. If you're waiting for a 10%, that would be around $478. Again, for those that are interested, 15% at $451. 20% at 424, although right now 5% MOS with mid-single digit increase of 7% in terms of Wall Street's expectations of 530, which is in line with our own intrinsic value. The 9th most owned stock by super investors, we have Wells Fargo and Company with a double buy rating, a hold from Quant. This one is trading in the mid to upper end of the 52-week range, probably the highest yielder we've seen today at 3%, and a forward P of 10.7. Now, over the last 12 months, up 26%, pretty much around the same as the S&P. Over the last 10 years, though, up only 6%. Now, in terms of their performance, whilst they have outperformed over the analyst expectations over the last 4 quarters, we do note 3 of the next 4 are expected to be negative growth to the earnings per share. Now, in terms of the valuation, the first one where we actually see some nice upside of 16%, price target of $64, where our own intrinsic value of 66 is only marginally higher. Now, a 10% MOS, a buy at 59.53, at 15% around 56, which is pretty much where it's at today. At 20%, if you wanted to wait, it would be around $53. So conclusion for this company, 15% MOS with 16% upside. This then brings us on to the final company, the Walt Disney, with double buy and a hold from Quant. This one is trading at the lower end of the 52-week range, a yield of around 1% with a forward P just under 19. Over the last 12 months, up 9%. Over the last 10 years, very marginal growth, 4.6%, very similar to what we saw at Wells Fargo. And we do like to report over the last 4 quarters, they have outperformed analyst targets. Moving forwards, the next quarter, strong double-digit growth, although we can see fluctuations over the next 3. Now, in terms of the valuation for Walt Disney, we see probably the most upside at stock number 10, 27%. And when we do run it through the MOS, well, at 10% a buy at 111, 15% a buy at 105, 20% a buy at 98, and in fact in today's episode for the Walt Disney Company we see 25% margin of safety, with Wall Street giving 27% upside. As always, if you enjoyed today's episode, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Don't forget to sign up to the free weekly newsletter below, and also come and join us in the Patreon where we do run through our weekly buys and sells. As always, have a great day, and we'll see you all on the next one.